focus. Ideate, innovate, enable.
Good evening, ladies and gentlemen, and welcome to the Export-Import Forum, part of International Trade Awards. Telangana, the 29th state of India, was formed on June 2, 2014, with Hyderabad as its capital. Telangana holds an advantage of easy access to capital and infrastructure. Large multinational companies already have a base in Hyderabad. IT and pharmaceutical sectors are likely to act as the backbone of the state's economic development. Hyderabad accounts for approximately 20% of India's total pharma exports. Andhra Pradesh and Telangana are home to over 260 bulk drug producers. Of these, 90% are small and medium enterprises located around Hyderabad and Visakhapatnam. On that note, without further ado, I would like to invite on stage our keynote speaker for the evening, Mr. A.B. Ravi, Editor, Special Projects, CNBC TV 18.
Good evening, everybody. My observation has been, over the years, the story of Indian exporters has not changed. It has remained more or less the same. Their story is high cost of credit, volatile rupee, poor infrastructure, mindless harassment in terms of documentation and processes, delays in getting export incentives, labor issues, so on and so forth. All these seem to have pushed the transaction cost of Indian exporters by 7 to 10% compared to the global counterparts. Clearly, the Indian exporters never had a level playing field. And surprisingly, consecutive governments have adopted a piecemeal approach when it comes to the export sector. It has not been a holistic policy. In spite of too many odds, I dare say, the Indian exporters have done exceedingly well. As a tribute to them, CNBC TV 18 has partnered with State Bank of India to host the 5th edition of the International Trade Awards this year. We do hope the Indian exporters get all the support from the government and they touch the $500 billion mark in the next 3-4 years. We are happy to partner Made in India exporters. We wish them all the best. Thank you.
Thank you, Mr. Ravi. I'd like to invite on stage Mr. S. Sadashiva Bhatt, General Manager, Corporate Accounts Group, State Bank of India, Hyderabad, for his welcome note.
SBI, we do indulge in some exports sometimes. If we find an employee is too smart, we send him to the neighboring office. Our EXIM trade results in a broad smile to the exporting office and a wide chagrin to the importing office. And you ask the manager of the importing office, how is the stuff? He will say it's export quality. But I know that you don't indulge in that. You export quality stuff. You bring laurels to India. You do proud to India. You are charged with the task of making things in India for exporting. With this, I again extend a warm welcome to the exporters of these 3 states.
Thank you, Mr. Bhatt. I'd now like to invite Mr. S.V. Joshi, Chief General Manager, Mid-Corporate Group, State Bank of India, Mumbai, on stage for his keynote address.
Our main objective in hosting such events is to promote international trade in India in the context of our Prime Minister's Make in India theme. As for SBI, as you are all aware, we have always been at the forefront of all banking activities in India, especially in extending funding support to all sectors and industries, from the smallest of businesses to the largest of infrastructure projects. In the area of exports, apart from handling your documents and realizations, our role revolves around providing adequate finance at competitive rates and forex services, similarly at the best exchange rates. We have always been biased in favor of exports, even though export credit is not separately included as part of priority sector advances for the purpose of our priority sector target achievement. And we'll conclude by reiterating that our bank, State Bank of India, has always been and shall remain committed to supporting our exports, country's exports in every possible way.
We've got a very heavy-duty panelist here. Generally, we talk about double whammy. But when I look at the export sector, it strikes to me that it's a triple whammy. The budget has ignored the export sector. The foreign trade policy is delayed by nearly a year. And I think the global scene is not looking so good. It's very tepid. So against this backdrop, how can Indian exporters become globally competitive? And what do Indian exporters want? That is our talking point. In the month of January, the merchandise exports grew, it was at a 3-year low. It grew by 11% to about say $23 billion. Looking at this number, we were not going to reach the $340 billion mark by March 2015. So how are you exporters going to go forward in terms of meeting the target? And what is the real problem at the ground level?
What you are telling correctly, that I don't think we will be able to reach the desired target. However, we may be reaching around 330 to 335 can be. There is some growth we have seen in some specific sectors, manufacturing sectors. But main reason for this slow growth is mainly from the European market. As you know that the European market yet to respond. And there is another major issue is related to our domestic problems, because manufacturing sector was not doing well. And our other major markets are OECD countries, where demand because of petroleum price, especially our major market UAE, showing a diminishing trend. In fact, if you look at UAE, more than 40% export what we are doing is consumed by the UAE, and the other 60% is being re-exported to other states, other countries like Africa and other GCC countries. And there is contraction of demand in these countries. So altogether contributed to this, but current year definitely is not showing much.
Not looking good.
Yeah.
Mr. Justy, as the Make in India campaign or the initiative by the government has given a boost to the export sector?
It is too early to talk anything about it, but it is what we are looking at is for the Make in India. You need to have, as I said, conducive atmosphere for us to survive. One is infrastructure, basic infrastructure, especially in the pharmaceutical industry. We are ready to do it, but the thing is the scale of operations are becoming bigger and bigger. We need support from the governmental agencies, especially in the environmental angle and also in the regulatory for the drug regulations, including the clinical trial operations and approvals. These are some of the things which we need, which we are not getting it. I think without that, nothing can move further. This is what's happening. So Make in India has to have some things has to be made perfectly for the industry to survive.
Dr. Chavez, is it the ease of doing business? Do you think it's better in terms of documentation at the port, in terms of getting the exports incentives, in terms of 24/7 all facilities? What are the paperless transactions? Is it ease of doing business compared to other countries in the world?
So when we are talking about Make in India concept, we have to add a tagline, profitably and sustainably. So otherwise, if you don't add those two, who will make? See, only public sector can make by government support without talking about profits and sustainable. So there are some industries where the ecosystem is not that relevant. Agriculture is so micro, is okay. IT, government doesn't interfere. And they can survive without proper ecosystem. Whereas in the manufacturing-led economy, the ecosystem is not there in India. Unless we create ecosystem where any entrepreneur, he will not make anything without making profit or sustainable. So if you spoil environment, everything, still make money, it's not sustainable. So we have to create ecosystem for entrepreneurs to make in India profitably and sustainably. That government has to do a lot there.
Interest cost is very high. Even the other day I heard L&T chairman saying that it's huge. It's something, for a company L&T it's 9 to 10%, whereas for others it's 12 to 14%. He's saying the cost should be around 7.5%. So as a banker, what is the story you're hearing from your clients?
As far as the finance or the banking system is concerned, we are quite ready for the Make in India. We are looking towards funding for, projects which are viable and sustainable, of course, which are, either it could be Make in India or for exports. as far as exporters are concerned, it is being given, State Bank of India is giving it rupee funding at one of the lowest rates. It is at base rate. We are giving it at our base rate, which is the lowest which we can give to anybody. And when it comes to foreign currency funding, even there we even try to give at a rate which is no profit, no loss, to depending on the customer, depending on his rating, depending on the profitability in the transaction. That is not only loan, I also get some bills to discount, I also try to earn some foreign exchange in this. If I look at the overall thing, I try to make it as easy for the pocket of the company as possible.
Agriculture. What are the kind of problems your sector is facing? I believe that there's a seed certificate, an important time-consuming task for you all. That's also a big setback if it's not given on time.
Yeah, I think, that is true for India too. First of all, I don't think India allows for imports of most of the seeds. Largely because seed for any country, because of the gene into, the environment interactions and all, and some of the diseases, it is a very controlled and regulated product. Similar is the crop protection. So to that extent, the registration process, similar to a pharma, I think you have to go through a series of evaluation trials. It might take anywhere between 2 to 3 years for your products to get registered in those markets in which you want to work. Oh. Having said that, there are phytosanitary conditions, definitely, because you don't know what kind of a pest or a disease you are going to carry it into the other land. So those are some of the process, but there is a certain amount of reciprocity which is there. If you as a country are being so strict and so stringent or not allowing anything to go, the other country would also obviously react. And so to that extent, we have to appreciate that. And then we have to work with
restriction from our government side in terms of export formalities?
No, if you don't allow anything to come from that country to here, that the other country also would, obviously. WTO. So I think it's a fair game. So we need to understand what is that. Having said, I think still, if we work on the quality parameters, and that is more of an internal to the industry, probably we stand a very good chance.
I believe the Pharmaceutical Export Promotion Council is saying that this year the growth is going to be less. Earlier it was 10%, it's going to be 5%. So what is the reason for this setback? And what is that you expect from the government? That do 2 or 3 things, it will help us grow.
See, if you really see the pharma GDP as a whole, the country, more than 60% is contributed by the exports. And the way the exports have to have a sustainable growth, right? Predominantly the regulatory approvals of the foreign countries have to be obtained, and there should be high level of understanding and skill development should be in place. That is one of the key challenges every pharma company is facing. What is one of the key things is the cash flows of the pharma companies have to be improved a lot actually by the government by paying the benefits etc. on time. Yeah. I'm not talking about the big company, every company, I'm talking about all. And also apart from that, the pharma industry, predominantly the formulations are supported by the API which are all medium sized etc. For them the cash flow is very, very important actually. And when the government today, if you really get into the budget, even the recent budget, if you really see deemed exports, etc., what is the issues, etc. A lot of issues are slowly coming actually. So the government has to see as a focus mind, this is the sector which is contributing to the GDP in terms of the foreign earnings in a big way. So they have to put a proper policy for that in terms of understanding all the issues, and then they have to move on like that.
The IT sector has put India on the world map. But I'm told NASSCOM is saying this will be again a muted growth. So how are things going to play out for your sector in terms of, and what is the problem? I believe there's some double taxation problem.
Yeah, see, as far as IT sector is concerned, I believe that, it's very globally competitive. Whether you grow at 10% as an industry or 15% or 20%, it keeps changing depending on the macroeconomic factors. What worries me, and if I can share with everyone, is more in terms of some of the things on the long term. See, the first thing is the IT sector, what we conventionally say, which includes a design company like ours, is all people-based. But if you look at the kind of engineering talent which is coming out and how much employable they are into the industries, there is a major challenge. On one side, you have the customer who is continuously looking for value-added solutions. you have to become more and more competitive, more innovation. But when you look at this talent, the kind of people you get from colleges, they have to be really prepared for the industry. And if I can just tell the solution also, for example, we operate in areas like medical, semiconductor, aerospace. So in one sector, we did a tie-up with one of the colleges, and we said we developed a new MTech program in avionics. So what we have done is we have helped them set up the labs. We have helped them make a curriculum which is relevant to the industry, and we also provide them the internship for the students. So I think this makes a specialized subject for avionics. This makes those people, immediately employable. Like this, I think we have to have a lot of initiative on the skill set. Otherwise, over a long term, I think we will have a problem on availability of talents.
The foreign trade policy which is delayed due. Now, what is that you all want in the policy? 1, 2 or 3 points, your wish list, that will make Indian exporters globally competitive.
If you look at top 100 products being exported across the globe, India is having only 2-3 products which having more than 2% share. For example, for textiles, ready-made garments, gems and jewelry. These are the 3 sectors. All other sectors, our share is less than 1%. So how to catch up this product? And most of the products, if you look at these 100 products, are not very high-tech products. For example, nut and bolts. This kind of products, we are very competitive in the industry, but we are not producing what globe demands. So there should be some strategy in the foreign trade policy to see and motivate the entrepreneurs to innovate to diversify to new products which global demand, so that we can increase our
because of low-cost innovation.
Yeah.
Okay. Mr. Justice?
Mainly, what we need is the import and export delays to be curbed, especially in our pharma field. I think this is where we are facing a lot of problems.
Mr. Subramanian?
This is, regarding the specific industry, they have to come out with very clear policies, single window policies where we get all the regulatory approvals in time without getting into that, and also provide the necessary infrastructure to efficiently operate the sectors where we are in.
Dr. Chava?
I feel government should create industrial parks on their own rather than PPP model. Otherwise, acquiring land and all is becoming very challenging. In industrial areas, land is more expensive than residential areas now. So, unless government creates mega industrial parks, where the mega companies, mega infrastructure government creates, it is conducive then to do manufacturing. Otherwise, people will set up micro industries, small industries. You may not be able to compete globally. So government should take initiative to set up mega complexes.
Easing the documentation process through technology. Actually, Reserve Bank of India, Customs, and the banks which are handling documents, these 3 can actually come on a platform where the banks, which are the exporters also, the exporter is giving the documents to the banks, and as and when the customs clears the exports, the documents travel to the banks as well as to Reserve Bank of India. The GR form is created, and it's a continuous technology platform which is continuous. And it makes the job of the banker easy, it makes the job of RBI easy, data collection becomes easy, the exporter does not have to go anywhere.
The agri-processing continues to be a very big potential area. Enough has been talked about in different forums, but I think there is very little which is done because we have a huge potential. Forget about seeds and all is one part of it, but even processed foods and cereals and other things, which we can actually do a lot if some enabling environments are created.
Last word, Ajay.
I think when you make an investment, either in terms of engaging a customer at a particular location or making investment, I think you need a very clear roadmap of 5 to 10 years. So I think one clarity we need is either way, how these special economic zones one has to view in long term. Accordingly, we decide that, where to put the business. And second, I think I would also support, there is a lot of scope for simplifying the STPI, SEZ related compliances procedures. They have to be digitalized, they have to be simplified. It takes really hell lot of work to really get some of those documentation ready. So I think overall I would say that, whether it is union budget or it is foreign trade policy, I think what we need is a very clear, long-term, certain clear policies for a clear business environment. And then I think we can deal with them in either case.
Gentlemen, thanks a lot for being on the show. Thank you very much.
State Bank of India would now like to honor the people who have excelled in the field of import and export.